Right. Welcome everybody to Midas Investing Live. Happy Saturday afternoon to anybody out there. Happy Christmas week, Christmas Eve, I guess you could say. Figured I'd do a short little stream today. We'll see how long it actually goes. I guess it kind of depends on how many people show up and keep me going on various things. But I figured I'd just do a brief little check-in show this week, give you guys an idea of some of the stuff I've been working on behind the scenes. Kind of a follow-up to some of the stuff that we discussed in our last live stream, going through a bunch of new pricing tools that I've been working on. I've been basically working a lot behind the scenes, trying to apply a lot of those tools to our current portfolio, as well as putting us in a position to look at lots of other companies in the future. So first, taking a look here at our portfolio, or actually before I get into all of that, I will ask right off the bat for anybody watching live or on the replay, please like the stream. It really help us attract more viewers to the channel. Really help get more people here on the regular. Please consider sharing the stream as well on other platforms such as Twitter or Discord or Facebook or whatever you happen to have out there, and be really appreciated. And also, if you're not already subscribed, consider subscribing, hit the notification bell, all of that. Consider joining the free Discord. The link is in the description below, but the free Discord is a place where you can catch comments from me throughout the week, as well as other people in our group having conversations about what's going on in the markets, what's going on in our own portfolio, stuff like that. So come be part of the discussions there. Yeah, so make sure you guys do all of those things. But yeah, as I was saying, taking a look here at our portfolio, I didn't really do too much this week in terms of my actual portfolio. Bought almost nothing really this week. It was definitely more of a relaxed week in terms of purchases. Really spent a lot of the week working on some of those tools behind the scenes like I was talking about, but didn't really do too much buying. I did buy a little bit of PayPal, but that's about it. And was considering a few other companies, but didn't really end up buying too much more. Hold on a second, my cat's trying to move all over the place. Mr. Beast, welcome to the stream. Mr. Beast calling out in mode. In mode's been having a good time for the most part. But yeah, taking a look at some of our positions here, we still are a little under allocated in mode, so we still probably will be trying to maybe add a little bit at certain points whenever we think the stock is being a little weak. Right here, and PayPal, we're still a little bit under allocated to. We're actually now a little bit over allocated to FG, as well as Smith & Wesson, as well as Interfor and Fidelity. So I am actually over allocated to a few companies right here, and I might be considering doing some trimming to them. But at the same time, I have to kind of balance it out with my cash levels, because I am trying to keep my cash levels at more restricted, reasonable levels, because too much cash has been a huge drag on my returns throughout the year. Coming down here, we can actually take a look at the way the returns have been coming. The total returns for each of our actual individual positions are really starting to look pretty nice here. As you can see, in general, we're up on the vast majority of our positions, and we don't have any specific individual one that's marked red, which in general, if it's marked green or red, that means it's up or down at least 25%, which makes it kind of a significant gain or loss level. So no significant losers in the portfolio now. It's now just a bunch of significant gainers and a couple things with some minor losses to them. And the actual returns themselves year to date, we're still a little bit less than 20% on the year to date, while the S&P 500 is now back up closer to around 25% on the year. So still underperforming on the year. I'm very disappointed in that. And as I was kind of just saying a moment ago, a huge amount of cash over allocation throughout the year has definitely been a huge part of the underperformance. Definitely some selection problems as well, and selling some stuff a little bit too early as well. So there's more than one thing really contributing to the underperformance, but nonetheless, I definitely think the cash has been one of the major mistakes of mine throughout the year. So with that, let's start taking a look at some of the other stuff that we are going to go through here today. There's definitely a lot of changes, lots of stuff I've been working on behind the scenes in terms of my dashboards and my template tools. I've been trying to kind of revamp them and rework, fix a few issues some of them have, add new features to them, and then also try to adjust some of my dashboards in such a way that maybe I can start to actually allow other people to have access to it for a price, of course. But that's something that I've been wanting to do and just have constantly run into roadblocks. In particular, for example, my valuation dashboard, which we have right here, which should look pretty significantly different compared to the last time you guys saw it, which we'll kind of go through some of the changes here. And it's still a little bit of a work in progress, but like most of this middle section right here is going to look pretty different than the last time you saw it, although it'll have some similarities to it. For example, we have here where it lists the sector for each of the companies in the dashboard. I used to have a second column right here where it listed the specific industry, sub-industry in the sector. I got rid of that because I found it to be a little bit of redundant information. We have a momentum column here where before I was listing the 50-day moving average and the 200-day moving average, and now I simply have a formula that calculates whether or not the stock is currently trading above its 20-day, 50-day, or 200-day moving average, or whether those moving averages are crossing above themselves. So it just gives us a measure of what the momentum signal is like in just word terms right here. So it goes from anywhere from being high bullish, low bullish, mid bullish to mid bear, low bear, high bear, and stuff like that. So all in just in one column right there, we have the moving averages rather than having essentially 2 or 3 separate columns for that. And then likewise, I also added an accumulation and distribution column right here, so you have an idea of whether or not the volume pressure is to the upper end of the candlestick on each given day or not. And this is actually on a monthly average rolling basis that this particular measure is calculated on. Then we have 3 RSI figures here now. When before I used to just have the daily RSI, but now I have the weekly and the monthly RSIs here, so you can get an idea of just how persistent the trends are with the combination of the momentum, the accumulation, distribution, as well as the different RSIs all in together. It can really give you an idea of what the current trend is like in each of these individual stocks. Now, we used to always have the relative volatility here, but I did used to also have a column where it actually showed what the average volume was like for each of these companies. But I found that to be a little bit of a redundant thing to include there, especially since it's in the R-vol calculation. So it's not really being shown right here. We did before have the shorts column, which you can see right now, the formulas aren't really coming through very well. I added some extra imported data from outside data sources, in particular the analyst target column, which you can see here, which along with the shorts, the forward P, the target, as well as the insiders, all those things involve taking a little bit of an input of data from outside sources. And for some reason, the addition of the extra column, even though I took out another column, which means it should be on net about the same amount of data input, but for some reason it's just not working right now. As you can see right here, most of these columns are empty. So I still need to work out some of the issues with that, but the goal is to be able to have all of these actually filled out for the most part. But what that does give you, if it is filled out, is that we would have their current PE, their forward PE, then you would have the analyst target, my pricing using the pricing correlations that we were talking about last week, which we'll be talking about a little bit more here shortly, and then also the insider change over the last 6 months. Then on the kind of the value section of the page, oops, in there, but the kind of like value section of the dashboard, which is over here to the right, it's basically all the same as you can see right here, but we did actually add one column right here, which includes the terminal multiple that's being used in the valuation. So what this does give you is a measure of kind of how conservative or not this particular valuation is relative to, well, say for example, the forward PE that they might be trading at, or potentially the target PE that's being implied by the analyst target that we have on the page there. But you can kind of get an idea of that. Like for example, right here, it has all of my companies. As you can see right here, it comes down to page 2 Canadian Pacific, which should give you an idea that, for example, that's only the section of the dashboard that I've actually managed to go through and change those spreadsheets around for. The bottom section of the page, I still have to essentially do all these changes for, so none of this has been changed over, but I did just do it for all of my current companies, plus a few of the other ones, including Parex Resources, Encore Wire, Baytex Energy, Schwab, JP Morgan, LPX, and Canadian Pacific. But I'll probably be trying to literally do the rest of them over literally the next day or two. But the point is, I just didn't manage to get all of them done before the start of the stream. But the point is I wanted to have a few more metrics here all on the dashboard, both in terms of trying to help time purchases, which is kind of what this left-hand section of the page is. And then the right-hand section of the page is more giving you a better understanding of what my valuation is and how it compares to other people's estimates of valuation, like the analysts or the bears, or even just market pricing in general. So all in, I'm definitely happy with a lot of the changes that are in this dashboard, even though, like I said, it's still a work in progress. So we'll see how it looks when it's all finished, probably by next week. And then I'll also probably have added a lot more nice and neat forming factors to like the middle section of the page here, because we used to have some, some colors going on to signify certain things going on. Maybe we'll have different colors to signify if it's a highly bullish momentum versus a bearish momentum and stuff like that in the future. Now, I did also change around some of the ways that the formulas work when importing all of this information from my DCF templates and the actual financial page templates themselves. And I did make a lot of changes to the financial templates as well, which I was talking about some of those changes last week, but I made even more changes throughout this week, which makes a big difference when it comes to actually trying to put these valuations together. And I mentioned that because I was talking last week about the fact that I really wanted to get back to trying to go through some of the companies I've screened to be able to find new ideas for investments. And I did basically none of that this week. This week almost entirely was devoted to doing just a bunch of spreadsheet changes and adjustments and things like that, which meant that I wasn't really looking at new companies at all this week. But I think a lot of the things that I did do this week, all these changes to the dashboards and the DCF templates, are actually going to make it a lot easier for me to make it to screen through and do valuations on a lot more companies at a much more rapid pace, because of the way that I changed a lot of the things in these dashboards and the templates, the way it imports the data. For example, when it comes to this dashboard right here, I usually had to do a whole lot of typing of inputs into specific formula spots in order to display all this information here like this. But I basically managed to cut down the amount of inputs required to essentially input a company onto this dashboard by like a factor of 5 over the course of this last week, which speeds up the process of adding companies to the dashboard. And then likewise in the actual pages for the valuations themselves, which I'll use Skyworks as my kind of example for it. We now have 4 pages of things to essentially fill out when coming to putting together the valuation of Skyworks, including full pricing and everything. I have a details page, which the details page includes my cost of capital calculation, as you can see here, but also some terminal multiple analysis. It includes my model that I built for the company that I have in my video, includes all the graphs and charts that I show from said video. But I also have the comparable pricing template put on this page as well. So by putting all this stuff together, I can come up with the pricing for the company, as well as having a nice comparable group to look at as well as the dashboard for all those pricing details. So that's just one of the 4 essentially templates that I have for putting together an analysis for a company. Then we have the pricing page, which the pricing page puts together all of the stock price related stuff like momentum and share statistics and things like that. So we have all the inputs, including all the reactions to earnings reports and the shorts, as well as the price targets and things like that, and the dashboards that I was talking about. I put together, I was showing you guys last week, these dashboards, which is essentially where all those pages come together. But the reason why that's most important is because this is also where the moving averages, the relative volume, the accumulation, and all that stuff is calculated. So all this stuff then is transferred from this spreadsheet into the next spreadsheet, which includes all the financials of the company, where I copy paste them from the ticker website primarily, which is where I like to get my data from. But this one other thing I did this week is that I made it much easier for me to do this part of the process. So it used to be I would copy paste the information in here, and then I would try to come over here, and basically wherever you see these light blue lines is where I would have a decent amount of stuff that would need to be essentially input into here on an individual basis. So all the gray ones I didn't have to fill in on an individual basis, but the blue ones I did have to fill in on an individual basis, which if you can see right here, it's not too much work, but that's still a significant amount of work. And if I compare it to, for example, the newer page, let's just open up, for example, the Smith & Wesson one over here, and compare that. Oh, wait, what's going on over here? Hold on. Hold on a second. Okay, I thought I had that on this one. Okay, hold on a second. I was going to try to show you guys one of the newer things, but I think I thought the Smith & Wesson one had the thing I was trying to show you guys, but let me pull open. All right, fine. I'll use the Meta one. It doesn't really matter which company I use to show it to you. I just need to make sure I have the right template for it, because I've been changing the templates themselves. Okay, but now here you can see we still have basically the same setup for the income sheet right here. There's gray lines, there's the blue lines, and then there's the purple lines right here. Well, the blue lines now automatically fill themselves in rather than being put in with a manual input, and it's the purple lines that have to be put into a manual input. So we went from having a pretty significant amount of lines that have manual input. As you can see right here, all of these blue lines would have needed to be filled in manually for each of these, where then if I come over here, it's now the purple ones that need to be filled in manually. So you can see it's literally only 2 lines on the income statement. It's 1, 2, 6 lines on the cash flow statement, and then it's 2 to 3 lines on the balance sheet. So all that right there, all the blue lines now fill themselves in automatically. So not only did the essentially inputting a company onto the dashboard got cut down by a factor of 5, but also now putting all of the financials into the template itself got cut down by a factor of 5 this week. So didn't get any analysis of any new companies done this week, but we did manage to get a whole lot of upgrades essentially to our tools to speed up the analysis process. It now takes much longer for me to work through all of the assumptions in the valuation template, like what the growth rates are going to be, what the margins are going to be, what the discount rates are going to be. Like that whole process takes much longer now than actually getting all the financials in order, which is exactly what we would like it to be. We don't really want to be wasting our time just inputting a bunch of financials in order. Like that's the thing that should be able to be automated. And there's still ways in which I can improve the automation of that in the future, I think, as well. As well as I didn't really get into the specifics of how the inputting on the dashboard works, but some of the things I think I figured out in terms of trying to input the company information onto the dashboard, I think I can apply that in some other ways, which will make it so that I can share my dashboards with other people in the future, hopefully. Like I said, I still have a few things to work out, but the point is I made some very useful spreadsheet formula technology discoveries this week, rather than kind of focusing in on specific companies. So not quite, unfortunately, as impressive as saying, okay, well, we have a whole bunch of ideas of companies to look at, but I do think that this will be really speed up our workflow in the future. So that's why I am pretty excited about it. Now, that's not to say we didn't do any screening for companies. We just haven't been getting it around to the point of being able to actually take a look at them in terms of valuation. We've done a decent amount more of pricing, as we were talking about last week. As I kind of maybe already hinted a little bit right here in front of you, all these companies that I was saying I have done all the updates for on the dashboard, or to include all the ones that have the terminal multiple here on this column right here. But then also you can see that the pricing column is filled in for a decent amount of companies. Specifically, all of my companies are the ones that have a pricing analysis done for them. So that means I at least did finish a comparable pricing analysis for each of those companies, which is pretty good, pretty useful. It means now we can say whether or not our company is undervalued, as well as over or underpriced, as well as over or underpriced relative to analyst expectations. And so multiple things that we can compare it to. But alongside with that, that means that we were comparing many other companies in lots of other ways as well. So coming back over to, for example, the Skyworks comparable page, I'm not sure if we actually showed this one last week or not, but either way, nonetheless, if I take a look at the Skyworks one, the comparable group that I end up having for them right here includes these particular 13 companies, and I found that the forward price to earnings ratio, as well as an EV to forward sales and a price to book ratio, were the best multiples to correlate them with. And I found that in general, gross margins, as well as operating margins, return on invested capital, net margins, return on equity, as well as debt to market cap to be the most effective factors to correlate against those multiples. So if I do that against all of these companies in this particular comparable group, then I can come over to this dashboard page here, and we have the forward price to earnings ratio, which best correlates against return on invested capital. We would expect that as return on invested capital goes up, the market would apply a higher multiple to them. So we have a positively correlated relationship here, as we would expect. And we can see that in general, the companies that would be below the line would be the ones that are underpriced relative to the comparable group. And then likewise, we have the forward EV to sales ratio versus gross margins, somewhat similarly positive correlation as we would expect. Underneath the line is where we would like things to be. Price to book versus return on invested capital, likewise, we would expect to be a positive relationship. Companies underlying is where we'd want to be. Now, on the fourth chart, this is where I combine all of the factors in all of the different pricing multiples together, and then combine it into one aggregated pricing upside versus downside. So now upside being on the vertical axis, that means we would actually want to be on the top of the line for this fourth chart right here. On the first three charts, you actually do want to be below the line, but for this chart, you do want to be above the line. And then on the x-axis, I have it against short interest, which, I mean, it's up to you to decide whether or not you want it to be positive or negative. That's just one other factor that I thought was useful to compare it to. But so either way, the idea is that above the line on this fourth graph here shows you which companies are the most underpriced against the comparable group. We have On Semiconductor, F Solar, we have Skyworks being very, very significantly underpriced, which is, the company in particular that we're looking at here today. So this is, like I said, I showed this, I'm not sure I showed the Skyworks one in particular last week, but this is essentially the method that we showed for a handful of companies last week, essentially identifying a comparable group, identifying which multiples and which metrics correlate best with that comparable group, and then identifying which companies are most under or overpriced relative to those multiples and those metrics and that comp group. Now, taking this concept further, and extrapolating it into kind of like the next level, as I was just saying, I did this concept with all of my companies, all the companies in my portfolio. I did this concept too. So that means I ended up with different comp groups of about maybe 10 on average per comp group, and for a lot of different companies. And so, I have a handful of companies right here. I have, what is it, like 15 different companies or something like that, or 14 individual companies, I think it is. So if you have 10 each there, that gets you over 100. Now the companies that I have in my portfolio are a whole random smorgasbord of companies, including like a gold mining company, a forestry company, an insurance company, a medical technology company. It's not exactly a very representative group for the market. So what I chose to do is I chose to say, well, what if I did a pricing based off of all of the comparable groups that I came up together for all of my companies. I just take all those comparable groups into one large sample group. That would make a much larger sample of companies, which should therefore get us better statistics. Better statistics means better pricing analysis. Now, since it's not a very representative group, as I was just saying, what I chose to do is I chose to add the top 30 market cap companies in the United States to the list. Top 30 market cap, just to make it a little bit more representative, though that does skew things in some interesting ways because it is the top 30, comparing it to the comparable groups for all of my companies, which included a lot of small companies. So this group, which now includes, let's see how many companies ended up in this this group here. 177 companies ended up in this grouping here, but it's basically 170 companies that are either really, really large or probably pretty small. And so that's just kind of a weird mixture of companies we ended up with. But nonetheless, I was like, well, what happens if I maybe compare all these companies together, a larger sample size, giving us better statistics? We found that the EV to forward sales was the best metric to use, as well as the price to book ratio, as well as the dividend yield. But either way, comparing them all in together, you can see the EV to sales compares against gross margins right here. Much larger sample group, as I was talking about right here. So anything below the line would be considered relatively underpriced, which it may seem like there's a lopsided amount of companies below the line on this chart right here, which is true. And that's because I've kind of zoomed in the sample a little bit. So there's actually more companies way up here that you just don't see, because I decided that anything larger than 5 for EV to forward sales was probably just too much. So for these charts, they're going to be a little bit more zoomed in on the part of the action that I think is worth paying attention to. Because like I said, we kind of want to pay attention to this section kind of under here, though the gross margins are on the bottom right here. So ideally you also want something with higher gross margins, but maybe something in the lower right hand corner, kind of where I'm actually blocking the screen a little bit, would ideally probably be where you kind of want to be. But nonetheless, you could scope through here, trying to pay attention to where some opportunities are. I see American Airlines down over here. I see Marco. I see Advanced Auto Parts, my company right there. I see Visto Outdoors. I see Interfor. I see right here. So plenty of interesting companies. A lot of my companies end up looking pretty cheap here. Now this is just one of those metrics. Like I said, there's the price to book metric you can kind of compare on a somewhat of a similar basis. Then there's also the EV to capital versus net margin, which also has somewhat of a comparable basis. Combine those metrics together into the pricing versus the short interest, which again, on this particular chart, you would want to be above the line, whereas the other ones you would want to be below the line. Now over here, we can start to narrow in on a decent amount of companies that could maybe theoretically be of interesting value in that sense, though it is a pretty random smorgasbord of companies as we were talking about before. Now, considering this as such a random smattering of companies, the statistics ended up being a little bit weird, not necessarily the strongest of correlations. So I was like, well, what happens if maybe I remove all of the weird companies that are related to my companies and then instead focus in just on the larger companies? I was like, what if I do a comparable analysis just for those 30 larger companies and nothing more? So it's still a pretty good sample size, but nothing too crazy going on. Found the EV to EBIT versus forward revenue rates to be one of the best, most correlated methods here. Now the benefit of doing it with the charts like this is that this gets us charts that are a bunch of companies that people are familiar with. We have obviously Nvidia way out here. We have Broadcom right here, Meta, United Healthcare, Berkshire Hathaway, PayPal, Chevron, as well as Exxon are both under here. J&J is under here. Plenty of companies underneath the line. We got companies on the line like Microsoft and MasterCard, for example. And now the other metrics, we have EV to sales versus revenues. We have somewhat similarly EV to capital versus return on invested capital. Similarly, combine them all together to the total pricing metrics. And again, above the line is where you would see the most undervalued or the most underpriced. And the most underpriced out of the top 30 market cap companies in the United States appears to be JP Morgan, Walmart, Berkshire Hathaway, United Healthcare, Exxon, PayPal, Chevron, Costco. That appears to be the most underpriced. Obviously, we still have ones above the line there. But interesting how some of those pan out. I would also point out, for example, that 3 of those were financial companies. A couple of those were commodity companies with cyclical swings in the most recent couple of years. So there's reasons to explain why those companies might be on the cheaper side of multiple things. So you kind of have to take these things into account. We're comparing only large companies against large companies with this particular page here. So it's basically saying amongst companies that are all very expensive, which ones are maybe less super expensive, something like that is kind of the way to think about it. So either way, the point is, if you were really wanting to only focus on big name companies, this would be kind of one way you could look at it. You could look at some of those companies above the line here and say maybe some of these are some of the quote unquote safer companies to pay attention to. Now, so this is the large market cap grouping, and this is the past page was that total grouping, as I was talking about, which combines all of the comp groups from our companies as well as the top 30. What if I then focus on a more narrowed, filtered in group? Let's not focus on the top big groups and not do the entire comp group. And let's instead just pick essentially the top 2 or 3 companies from each of those comp groups in my pricing analysis on my specific companies. So now we're focusing in just on my industries, the companies, the industries of the companies I own. But let's say, like, what is the most underpriced in each of those industry groups? Let's group them all together and then see which ones out of all of those are the most underpriced against each other. So that's what we did with this particular page right here. A little bit different than the other ones. Still, we found the PE ratio, the EV to forward sales, as well as the price book metrics to be the best multiples to correlate them against. And coming over to the dashboard, we have the PE ratio versus the debt to market cap, a negatively correlating metric as we would expect. Debt to market cap for EV to forward sales, negatively correlating as we would expect. Price to book ratio and return on equity positively correlating as we would expect right here. And all these charts have been zoomed in a little bit on the section of the chart that we kind of wanted to focus on. Like I said, for the first 3 charts, you would kind of want to look at the companies below the line. And then for the 4th chart, you want to focus above the line. So that's why you can see like the lines right here. We pretty much just focus the chart in only on the section of the chart you really want to focus on. But either way, the point is just focusing in on just these best of the best. That's essentially what this grouping is essentially the best of the best. If we're just focusing on the best of the best, which ones would we want to maybe take a look at? And we see maybe Genworth Financial, I think it is, maybe American Outdoors, maybe Western Union. There's a handful of them here. Maybe Anglico Silver or whatever AEM is. I can't remember what the name of that one is. I know it's like a Anglico something silver, something like that. I do note that a handful of the ones that do appear in this particular grouping, however, are all within the annuity business. So once again, we see a disproportionate tilt more towards the financial company side of things here. And that partially has to do with whenever you do a comparable analysis that involves a bunch of companies from different industries, you're going to end up with some obvious industry tilts in that sense. So we saw that with the large grouping, we saw that with the mega cap grouping, and we saw that also with this filtered grouping. That's partially why I'd like to do the comparable analysis on an industry level. It's just sometimes it's difficult to get enough companies in your sample to do a full industry level analysis in that sense. But either way, so the point is just taking a look at that. It's like I'm kind of focusing in on some of the companies here. I kind of feel like American Outdoors, AEM, and Genworth. Those are kind of the three that really stand out to me as ones that maybe I'd want to take a look at. One of them is more on the retail, recreational, discretionary side of things. One of them is more on the industrial, basic materials side of things, and another one's on kind of the financial side of things. So those are potentially some companies that could end up being good companies to look at. And then, kind of focusing in on those large cap companies. Like I said, we do end up having the issue where there's different industries within here. But if I had to guess which ones of these would maybe be worth taking a look at beyond obviously PayPal, because obviously I already have a position in PayPal, so obviously I agree with this one being underpriced. And you'll notice that PayPal was underpriced in its own comparable group. It's underpriced in the large group, and it's underpriced in the large market cap group. So PayPal just appears to be underpriced, no matter which group you kind of compare it to, which is always really nice too. So, which is one other reason why it can be kind of nice to compare to multiple groups, because you might say it's like, okay, well, maybe there was something weird about that particular group that made the statistics work out that way. What if I throw in a whole bunch of different units into the sample, so to speak? So let's see here. I feel like I blazed through a lot of the stuff I was planning to talk about a lot faster than I was actually sort of expecting to. So let's see, or maybe I forgot something there. It's always possible too. Yeah. So by the way, so my plan for this week is to, as I was saying, finish adding or updating the spreadsheets for the rest of the companies at the bottom of the dashboard here, as I was talking about. Basically, we have how many companies is that? 10 companies exactly that I need to add to the dashboard. I can probably make it through maybe all of it tonight, but if not all of it tonight, then probably just like 2 days in total to finish all of that. And then, as I was kind of talking about before, some of the formulas, tricks that I figured out this week that helps me input the data onto the dashboard, I think I can then apply to my kind of beta tested dashboard that I have for consumer use. I have been essentially trying to make a version of this dashboard that I can essentially share the link for with people who would pay me for access to it, so that you guys could essentially have a file that you could open that would give you essentially access to all of my most updated research at any given day. However, I ran into a lot of roadblocks in terms of trying to update the data on kind of an automatic basis, and so that was one of the reasons I haven't been able to actually do something like that. But I think I figured out a few interesting ways to maybe work on that this week. So I'm probably going to be doing a lot of that this week, trying to kind of work behind the scenes on these dashboards and these DCF tools to essentially work on stuff like that. But hopefully somewhere in there we will come up with an idea for the next company that we want to take a look at. Right now I do have like a whole bunch of other companies beyond, for example, the the kind of list of companies that I was talking about right here, that kind of come up pretty nicely amongst the filtered groups. So I do kind of want to maybe take a look at a lot of those companies, but there are a handful of other companies that I've gotten suggestions from other investors of certain blogging websites that I pay attention to. So there's a handful of companies that I want to do some basic valuations on and kind of like see where it goes from there. And then there is also the secondary page of evaluations, the potential valuation page itself. Once I finish doing all the updates to the main valuation page right here, I kind of have to decide what it is I want to do with the rest of these companies right here, because they themselves would need a lot of those updates. And then maybe I'll just ditch a lot of these ones and say that they're not worth taking a look at. But then there is a handful of these ones that have been here near the top, looking like maybe there's some sort of potential interesting value to them, but I haven't really gotten around to making full models for. So maybe we'll be taking a look at some of those ones at some point here in the near future as well. So, all right. It was a much shorter stream, but I kind of really just wanted to give you guys a bit of an update on some of the stuff that I was working on this week. Because we used to do all of our streams on Sunday, and then last week I did one on Friday. So I figured why not also maybe try one on Saturday this week. Not to mention, obviously, Sunday this week is Christmas Eve, so I was gonna be busy. You guys were probably gonna be busy. We definitely weren't gonna be doing it on Sunday, so I figured why not experiment a little bit on Saturday. But either way, I think I might just cut it short a little bit here with that. It doesn't appear that too many of you guys were available necessarily for watching live today, but like I said, I kind of just wanted to give you guys an overview of some of the stuff I've been working on, but I do have a whole lot of that stuff to work on behind the scenes, so I might as well just go and work on some of that stuff right now. But either way, happy holidays to all of y'all, and I will catch you all next week once we're through with Christmas. But yeah, Merry Christmas.